Hey traders, welcome back to another review. Today we're going to review ticker CTMX as it hit the scanners quite early this morning and has gapped up, and we're going to go over exactly why that happened, what we could have done, how the strategy confirmation would work on this ticker here, and what were some of the red flags. And I'll explain why I took or did not take this trade towards the end of the video. So stick around, guys. CTMX, we can see a lot of volume. So if you have watched any of my videos in the past, or if you're a member of our Discord community, you'll see that we have these white candles. That's going to tell me that there's a lot of volume. And if I'm trading during the regular market session from 9:30 a.m. Eastern time to 4 p.m. Eastern time, well, I want to see those white candles. I want to see that high volume if trading these stocks. Otherwise, it's just high risk, and therefore I need to greatly reduce my size or just avoid the trade altogether to protect myself. Now, CTMX hit a high this morning of 585. What a move. And we can see a bullish vertical trend. So the indicators that I have on my chart here are found at BullishBobLive.com, and we made all of these indicators really specific to the strategy that we're trading, because this is the most successful low float strategy there is, as far as I've found in a lot of our traders as well. So CTMX, what we're looking for is it to close over each one of these lines and levels, which is going to be our resistance. So our confirmation strategy support and resistance will automatically plot that for us. And we're looking for the price to have a white candle and close over that key level. The close is going to be the open, high, low, and close, and we're looking for the candle to close. So that means we've got time to make our decision. We're waiting for this countdown on the right-hand side on TradingView to tell us, hey, there's still 20 seconds to this candle. So if I were to take this trade now before that candle has closed, then I would be taking a very high-risk type of setup, and that would be more like anticipation, not confirmation. But I want to zoom out here and look at where we got started on ticker CTMX and what was going on here. Now, in our group, we did not find any news on this ticker. So we did not find news, but we did see this one moving very fast, and we did add it to our Discord group here. You'll see that we add all of the support and resistance in the current level. So if you don't have our indicators, but you still want access to our the charts, you can do that as well. Just click on here and you'll blow that up, and you can see, okay, well, the price when we share this chart was $2.02 on CTMX, $2.02. Let's see the high on this one. Well, we can see it right here. Recent high, 585. So imagine that, guys, from $2 almost to $6. What a huge, huge move following this this chart that we shared. Now, what it was saying here is there's recent bags, and major resistance is 231, right? 231 was that major resistance, and it had a large float, so that was a concern. So there was some red flags here, and at the time that we shared this chart, the price was extended, so it was best to look for a higher quality type of setup, or just avoid altogether, or even reduce your size if trading this type of setup. So it wasn't the A+, that go-getter, let's throw all our eggs in one basket type of trade. But that being said, it did have potential for breakout because its major resistance was 231 and recent high was $2. So we're hitting recent highs, and we know that the major resistance here at 230 and 231 is a cluster of resistance to this final level of 234. I don't know if you guys can see that or not. Let me see if I can zoom in. There we go. Let me see if I can move this over, and of course, I'm having a hard time because I'm not used to doing that. But you guys can see here the 234 anyway. You can see that if I zoom back out a little bit, you'll see 230, 234. So that means we have a cluster of resistance. And if you guys are trading the confirmation strategy, which is the strategy we trade every day live in voice Monday through Friday, well, then you're looking for a clean close over the key level. And if you're seeing something like a cluster of resistance, we want to go to the top of that resistance. So it's 234. So instead of taking it at 231, the key level is actually 234. So if we see a close over 234, we're good to go. Now let's analyze the chart and see if we had that close over 234. Let's first mark the 234 on the chart. So that's this red dotted line here. Let me go ahead and plot we'll do a price label here, and right at the 234. Okay, so that is our key level, right? Does that make sense? That's our key level. This candle had the volume we're looking for, closed over the key level, and continued next candle to hit targets 1, 2, 3, 4 targets in a single candle in a 1-minute chart. This is a 1-minute chart, by the way, guys. I always trade 1-minute candles, 1-minute chart. That's just how I trade. Confirmation looks for 1-minute candles close over the key level for bullish momentum, and it closed back below for bearish a bearish trend in our exit signal. So the idea here, right, is that if we get in over 234, okay, where are we looking to start to secure profit? Well, we have all of these signals and resistance levels above. This is a cluster of resistance. So we can expect some choppy price action. We can start to take some profit. Now, I always like to hold a lotto myself, but not all traders like to do so. But if you did hold a lotto on something like this, meaning you sold most of your profit, not all, and you held yourself a lotto, this thing could continue and give you a little extra gravy on those biscuits. And man, it sure did, guys. Zoom on out and you'll see that it continued all throughout the day. And we'll get into that here in just a second. But more specifically, the entry for confirmation. This is what we're looking for. This is in the pre-market session. You can see that we did have yellow candles, which is fairly high volume. Yes, we did have some major red pullbacks. And yes, we are expecting some choppy price action. And the reason we're expecting choppy price action is because we have a lot of line and levels, but we also have a higher float. This is a large float, right? So we really prefer a float size below 25 million share float. It was not below that. So that's our first red flag. So what that tells me as a trader is, okay, I can trade this. This is still confirmation. This is still high quality. It's just maybe not as high quality as something with a lower float, right? So it's less consistent with that higher float. And therefore I want to reduce my size because I see that red flag. And if you reduced your size, you still got yourself a really nice trade. And if it went against you, that's your contingent plan. That's why we're trading with smaller size on these higher risk type of trades, because it has that larger float. It takes a lot of volume to push that needle or that price around. And we did get a lot of volume. And sure enough, if you did sell into profit targets here, man, that was a huge, huge move. And if we measure that from that key level, guys, and again, that was added at, we'll check the time here in just a second. But if you measure it from this key level, right, 234, right about there, all the way to the top of this move, which, you know, you'd have to be Superman to get the full move. But $3.50, 150% up. Man, that's beautiful. That is beautiful. That is a squeeze if I've ever seen one. And that is nice. And this was really the only stock that gave us anything. We had Pally this morning give us a little move, but it didn't close over its key level and hold. So we had to get out of that position. And I'm glad I did, because then it just downtrend from there. But if it gets back up to that level, we do set alerts to be aware of that to better assess conditions before we get into the trade. So it's make or break, guys. Draw that line in the sand and it gets over. Great. We can trade it. If not, we can't. And again, if we're zooming in on this entry here, this big old white candle, which had a lot of volume, hover over that 315,000 shares. Hard to see. You can see it up here. But if I hover over 315,000 shares, if I'm trading, 2,000 shares because I'm minimizing my size due to the risk associated, well, hey, that's minimized my size. I think I'll get filled on 2,000 shares when there's a 300,000 share candle on a 1 minute chart. That's a lot of volume, a lot of volatility there, which is great for us as day traders, especially when we're trading with this strategy. So closed over the 234, held. Now our stop loss area would be in here. So anything below this area, you can either wait for the candle to close, or you can just exit if it starts to gap down, just to protect yourself because of that red flag. That's something that I would strongly consider. Otherwise, the plan and strategy here says, okay, close above bullish, close back below bearish. So until we close back below 234, we are good to go. And every level we close over, same idea. This stop right here starts to move up. So maybe your stop's at 230 or 229, 225. Then all of a sudden it moves up because the price is moving up and you're taking profit. Well, your stop's moving up with it as well. Now, at this point, we're seeing some pivot zones. We are seeing some choppy price action. Again, we will expect choppy price action. Why? Because of that red flag right there, guys. Our favorite stocks to trade will be under 25 million share float. That doesn't mean we can't trade confirmation on stocks all the way up to 150 million share float. As I mentioned in my past videos, anything under 150 million share float, we consider to be low float. It's just prime time if we're trading under 25 million shares in the float size. That's going to be our best bet. Now, we plotted a pivot zone over here. And if you see at the top of this move and you're wondering, where could we get out? We did not hit one of those lines and level. What's going on here? Why did it downtrend? Well, it downtrend here, or it downtrended because it had this bullish vertical trend, which is this indicator that we have that will plot that for us, the volume, the bullish vertical trends, the red flags, and let us know, hey, be careful. If you're trading this, great. Maybe it's time to take profit. If you're not in the position, well, maybe wait for a setup, maybe over this pivot zone. And sure enough, it did not close over the pivot zone, tested, false break, fell down. And actually, guys, this is the candle right here. This candle and this candle closed below that level. let me turn this off just to show you that. This red candle closed below the level, and I believe this one may have as well, but this candle here closed below that level. Nobody wants to take a loss, right? Nobody wants to admit, okay, I took the trade here, hoping it would bounce. It didn't. I don't want to take this red. Let me hold on to it. Well, it just continued to downtrend. We're not holding on to losers, guys. We're looking for confirmation. So at this point, 585 was the high on ticker CTMX. Yes, there's large float, so this will be very high risk, and therefore I think it does merit a smaller size if trading. But close over $5 needs to then hold, but really it hit the 550 half-dollar mark, so half and whole, half and whole, half and whole. Stick that in your brain. Half and whole dollar is going to hold weight as a mental resistance, and this is that half-dollar mark right here. So if I drew a line, I can go ahead and do that now. So Alt-H. And we'll have it as a blue line for now so you guys can tell the difference here. That blue line is not a major weighted level like the rest of these. This is a mental level. So we want to see it close over 550. Next mental level would be 6. So if I get in at 550, $6 would be a target. And of course, I will reduce my size due to the float size here and the red flags that we have associated with this. Now, another red flag we have, guys, is those major reds. It is becoming more common. We have these major reds here, these pink candles you see, and these are major reds. Not too many. We've got, let's see, 3 in the pre-market there, 2 right here. We can see that really easily with, again, our indicator will automatically plot that for us and let us know. So it's doing a number of things on CTMX. Now, another one to take a look at, that's my breakdown on CTMX, guys. And if you're looking for confirmation here, now the confirmation level, again, would be 550. It's very high risk because it's not a major weighted level, so that's using a mental half-dollar test, but that's still the level. Close over 550, well, you got to hold it, right? If you can't, that's where a stop should be. If you can hold it, $6, start to take profit. Hold a lotto in case you feel there's continuation. Levels above, we're looking at 651, 660, 675, 697, 750 with half and whole in between. Don't forget the half and whole will hold weight. Take some profit, secure it, hold the lotto in case you feel there's continuation. Now, another one I want to quickly go over just as a little bonus here for anyone who's stuck around is SYT. This one was hitting the scanners today and gave us an idea of possible continuation. Now, this one I like, although the float's not listed here on TradingView. We do have the float listed on our gap scanner here. You can see that the float here is listed at 4.2 million. Excuse me, that's the shares traded today. The float is listed at 1.8 million for that SYT. So we can go with that and we can say, okay, well, there's some skepticism about the float size, right? So it's not listed on maybe all scanners out there. We want it to be obvious. We can see that just taking a quick glance at this, do we have any major reds? Yeah, we've got a few major reds here to contend with, something to definitely consider when taking our trades. Do we have consistent volume? No, we don't. We have a white candle here, yellow candle, green candle. So the volume is very inconsistent. We can see that just by quickly looking at this. Right now we have a bullish vertical trend. This is hitting a lot of scanners saying, hey, there's volume here. Do you want to trade me? And no, we don't want to trade it because it's very high risk. Or if we do trade it, it just means that we need to reduce our size, tighten up that stop loss, and protect ourselves because that's what we're doing. We're assessing these trades. Now, this one hit a high of $6.09. Now, it's going to be tricky because the key level is 560. And you can see this was a false break. And we got this in the chat before this move happened to protect traders from taking that false break. We had a bullish vertical trend over our key level here. Let me zoom out right here. I don't know if you guys can see that or not. Let me turn this off. Maybe it's easier to see. Yeah, there we go. So this red false wick here, right? This is a false breakout, whatever you want to call it. This was our key level, 560. Okay, we did not close over. We gapped up. Man, it gives you that feeling like, oh man, I need to get in this. FOMO. Well, guess what? Avoid FOMO. Guess what? It just faded back off. Now we'll see what it does. It might curl back up, but it has to close over 560. The only issue I see with this one, guys, is this. This one already filled the gap to $6. The high is $6.10. So this nasty candle, unfortunately, took out that move from $5.60 all the way to $6. So the trade over $5.60 is very high risk. So add that to the red flag. So yes, there's a red flag. It's not on all the scanners out there. Yes, there's a red flag. It's inconsistent volume. Well, now we can add another red flag for this. So that doesn't mean we can't trade the stock whatsoever. I want to make that very clear. This is still confirmation. It's just, does it fit your risk profile at that time? For me, I don't think it will. I think I'll sit out. Will I miss out on a 100% move? Maybe. I don't know. It doesn't matter, guys. I've got to stick to what keeps me consistent. That's what matters. And there will always be more opportunity next, coming up either later today, tomorrow, or the next day, guys. And this is a career for me, not a get-rich-quick scheme. So, guys, if you learned anything in today's video, throw it a thumbs up, and I'll see you in the next one.